Welcome guys to another video. This is the Float Locker. On this video we're going to talk about how to sell options, especially for beginners that are unsure of how to do it, or even just wondering how it's so complicated, which it's not. I'm going to show you how easy it is, and how it requires very little bit of your time so you can concentrate on other ventures in your life. All right, so here's my webpage. Please subscribe, first of all, thefloatlocker.com. Go to thefloatlocker.com. Window will pop up, as you'll see here, eventually. That'll ask you to subscribe. Or you can just go down to the bottom of the page right here and just punch in your email address and subscribe and follow along. Here I show all my trading updates. You can see my portfolio performance. Every once in a while I'll show detailed trading stats. Sometimes I'll throw trade executions on. Initially I did it early on where I showed all trade executions, but it just took a lot of my time. So I might bring it back later when I have more followers. But yeah, there's that. And then education and just information, where I teach people how to just trade options. It's all free. There's no course or no money to pay or nothing. It's just sharing the knowledge, and want to get people more familiar in how to sell premium. Okay, so I'm going to jump right into this video. Here's my account. This is the account that I opened in June, just to show everyone with full transparency how to trade options, how to sell premium as a primary strategy with, sometimes I'll buy premium here and there. But for the most part, I sell options and I collect premium. I like to, my particular strategy, I like to sell naked options, straddles. Straddles is usually when my strangles are going against me. I'll usually end up in a straddle. But for the most part, I start out as a naked put, strangles, and that's pretty much it. And in this, usually I'll trade spreads as well. For more of a short-term play, but I'm going to go over all that and the reason why I'm not doing spreads too often in this environment. Okay, so when people usually start trading options, they want to just buy them, and they want to make as much money as possible with very little money, which is totally understandable. That's how I started too, about 7 years ago when I got into options. And I was buying same day expiration calls and trying to time the market. So which is it's a good way to get your feet wet, but the problem with that is that a lot of people, especially if they have some good luck early on, they start thinking that they could trade with larger size and make a lot more money very quickly, which some people do. But I'd say about 90 to 99% of the people that try actually fail at this tactic. And here's why. This market is very efficient. It's priced efficiently, which leaves for very little edge in the markets, right? Especially if you're buying options. So this is a problem, and especially if you're trying to say, like, if we go to the weeklies here and you're trying to make some money off of these options, right? So sorry, I don't know what it's doing there. Here, close that. But say if you're for instance, you're bullish on SPY and you wanna play options that expire 2 days away. You go here, price is around 338-ish, 339, 338.28, right? You're like, well, it could probably hit 345 by the end of the week. So you buy a 30-cent option here. Super cheap. It's $30 an option. But here's the problem. It's going to decay very quickly. Every day, this option is going to decay 16 cents at least for the next day. 16 cents out of the 31 cents of the price of the option, that's 50%. So you got to think, this is out of the money. Right now, the only value here is perceived extrinsic value. It's all perceived. It's all what people believe it to be worth, right? There's no intrinsic value. You only get intrinsic value when the options go in the money. That's when you start getting intrinsic value and hard value that just will not decay. When it's outside of the money, that's not the case. This is all perceived value depending on implied volatility. But I'm not going to get too complicated on that. But and here's another aspect. So first of all, you have time working against you. So if this doesn't get in the money by tomorrow close, most likely this thing will probably decay 50%. That's a problem, right? So you got time working against you. Second of all, for every dollar the SPY stock, the underlying goes up, you gain only 11 cents per contract in value. So in order to make this worthwhile, right, you would have to play pretty large. I'd say you probably had to put a good like $500, maybe $1,000 into it, right, and try to capture a move. You got to try to time the move. You got to use technical analysis. So you're sitting at your computer all day, right, like trying to time these moves and really time it, right? So I've played that game, and it can be very difficult and very time consuming. I have other things in life that I want to do, so I went the other route. So I went to go selling options, right? So when you sell options, you're wanting these options to expire worthless, right? Specifically like SPY, I don't really trade SPY nowadays, especially in this account because it's I have to use spreads because it's a smaller account, right? I have about a little over almost $14,000 in this account. So selling a SPY option is not a strategy I want to use, like a naked put, right? Because it'll just take up way too much buying power, take up all my buying power. Eventually, when we get this account large enough, we can start selling naked options. So just think of it as a game, right? We need to level up our account. We need to get up and going, right? We started this at 8,000. Right now we're at almost 14,000, right? I am up 31% on the year. It was over 60% a couple weeks ago, but we had that big tech bubble crash, right? But that little correction, but whatever, right? So I was a little too overexposed, especially in the couple names. But we're still up 30% since June, which is phenomenal, right? So yeah, anyways, let's get to the point here. So here I'm not going to show you how to navigate a platform. That should be something that you should already be familiar with, or just get, you could Google videos on YouTube and find that how to put it in order and all that stuff, right? I'm not going to go through that. So first you want to just pick like a couple stocks, like very few names that are that aren't too volatile, right? And I did pick a couple for you. So what I picked was we want to try practice on spreads, and you want to practice on naked options, right? So, and especially on naked options, if you don't know what you're doing, it can be dangerous, especially when it goes against you and you don't know how to manage it, right? So you want to pick a name that's not very volatile, that's easy to trade, right? So for instance, I would say use AT&T, which is a ticker symbol T, right? You can look at the chart past 6 months. This thing has stayed around $30, right? This is a very solid stock. It's people just use it to get dividends, right? And it's just a dividend churner, right? It's every month or whatever quarter, however often they pay dividends. That's what people use it for. It's not a day trading stock. It's not a very volatile stock. So this is a perfect stock to use to trade naked options. So if you want to pull up the options chain here, right? You want to look at selling options that are at least 30 days up to 45 days until expiration. So you see here we have the October monthlies. And you always want to use monthlies, right? Because the spreads are just a lot tighter. They're a lot closer together, right? There's a lot more people trading them, which makes the spreads tighter, which brings in more liquidity, which makes it easier to buy and sell and get in and out, right? You want to trade weeklies because there's less people trading them. The spreads are usually larger, right? Or usually wider. There's usually not a lot of people trading a lot of the strikes. So I don't know why that's not loading, but you can see for yourself. But just as a beginner, use monthly options, right? So you got the October's expiring in 32 days. You want to sell a naked put, right? So you want to configure your columns here. I always have delta and theta. That's all and the open interest and volume. That's what I look at, right? So for a naked option, for me, I like to take on a little more risk, take on more credit, right? So I'll usually sell right at the money, right? But sometimes if I feel a stock is volatile or whatnot, I'll use a rule of thumb and I'll go to a 32 delta right here where you see it right there. This was like a 31 delta for this stock, right? But say like for Tesla, I'm just using Tesla. I don't trade Tesla in this account because it's too large of a security that it just uses too much buying power. But if you want to sell like Tesla puts, right? We're gonna have to go way out here, right? So we want to go to like the 32 delta, right, which is $385. The $385 strike. You got the 33.90s, right? Or it's priced at 33.90. This is what you want to do. This is like a kind of like I still want to take some risk, but I don't want to be too close to the money, right? And if you even want to go further out of the money to even reduce to mitigate risk even further, I'd say go down to 16. Especially if you're a new trader, don't trade Tesla. Especially selling options, I don't suggest it unless you know exactly what you're doing, because this will wreck you, especially if you don't know what you're doing. So stay away from Tesla and these high beta stocks. If you're practicing and just starting, just use very slow moving stocks like AT&T, right? So here you got the 16 delta at 328. So as long as the stock stays above $328, you collect all this premium by 32 days from now. So anyways, let's go back to T, right? To AT&T. We're going to pick an option, right? So if you're a beginner, I'd suggest, especially with AT&T, it doesn't move that much. You could probably sell one of these two right here, right? Go down to 17 or 10. There's kind of a big gap there because it's most likely not going to $26 a share in 30 days, right? So if you want to play it super safe, go down here. But commissions might eat into your profit, or they will eat into your profit unless you use a no commission broker. But I think those brokers that charge zero commission don't allow selling naked puts, but I could be wrong. I don't really mess with those brokers. But anyways, let's say you want to keep it safe. So you just sell a $26 put, right? We review it. You could kind of look here. The bid and ask is between 11 and 12, very tight spreads. If you want to sit on the offer or whatever, and then just go ahead and send it. But just note here the buying power requirements. So we're getting $11 in credit, which is our money that we get to keep, right? The fee, 65 cents here for the option, from the broker. So we're getting $10.35 in credit. Buying power effect, $267. So what is this? This is what the broker is requiring you to put up as collateral for this stock, this particular stock. So it's saying that as long as, in case this option goes against you, say the stock tanks to like $20 or whatever, you need the buying power to be able to purchase stock if you get assigned. So you may get assigned shares if it goes against you, right? You need $267 to be able to hold this position, and if you get assigned shares, that's usually around the buying requirement that you need to hold 100 shares of this stock of AT&T. All right, so that's kind of the gist of it, of how to trade a naked option, right? And that's pretty much I would suggest starting out just naked puts, right? Go out to a 16 delta, right? Or even less, and make sure to do a monthly option, at least 30 days till expiration, and just sell them, right? So sell one, do a one lot, don't go too large. Just get a feel for it, and just look at it over the next month and see how it trades, right? And get an idea of how this works. But if you're a little bit more of a risk taker, I would suggest actually going to even like the 27s, because $10 in credit is not a lot. You're not going to see it move a lot, and you're going to be kind of disappointed waiting a month to collect $10. So I would probably go even like the 28s or 27s. I would say 28s, just so you can actually see the decay. There's more extrinsic value here that you can pull out of this option, and it would actually be a better learning experience. So if you're willing to take on more risk, give it a try. The thing the great thing about naked puts is that you have time on your side. You're selling time, and you're collecting on that time decay, right? So even if this stock goes below 28 and you're selling the 28 strike, so you're in the money and you're getting breached and you're in a loss, it's okay. Follow the mechanics, right? Check out some of the, I have videos on my blog, right, theflowlocker.com, that gives you resources to be able to watch videos and learn how to use mechanics in options trading, right, and how to defend a position. But just in summary, the best way to do it, you just leave it. You wait until 20 days till expiration, and that's when I like to roll out in time. If this thing is breached and it's going against you, roll it out in time. Collect more credit. You got to wait until 20 days because that's the optimal time to wait until managing a position, right? So you got a short put on here, then you'll roll it out. You'll see here, like today, this is worth about $47, this 28 put for October. In about 12 days, you would roll it out to the November puts, right? So you go out here, and you can see it's about double the credit here. So you would roll it out. You would probably collect another $40 in credit, right? And you'll wait for the stock to chop around, even if it's going against you. A good example is my Wells Fargo. It's doing exactly that. It's been against me for months. I think I sold the $26 put, and it's below 25 right now. So the option has been going against me, but I'm still in a profit. I can even show you right now. So if we go to my positions here, we go to Wells Fargo. I'm still in profit here, and actually here, let me get the P&L. So we got Wells Fargo. I'm up $53 for the year, and I sold this $26 put a couple months ago. I was like in August, I believe, and it immediately went against me. And and it's in the money. I've just been rolling it out, collecting credit, and I'm still in profit, even though this thing is against me. That's the power of time and using it to your advantage, and selling premium, right? Just selling people time, right? And you just collect on that. Even though this thing's against me, I'm still in profit. So as long as you're patient and can wait and allow the trade to play out, eventually this Wells Fargo stock will get above 26 and I will really cash in. Right now there's about $230 of premium, or it's not actually premium, it's like intrinsic and extrinsic value in this. So eventually this thing will pop up and I'll be able to collect all this right here. It's a 67 delta right now. So every dollar this stock goes up, I make 60. I bring in $67. So you can see, like, if this makes a move up over 26, this thing be way in profit, right? Just from a one lot, rolling out in time and just waiting, playing the waiting game, waiting for the cycle to reset and go in my favor. So that's the game you're playing, right? All right, so here's another option. I'm gonna talk about spreads here. So if you wanna play a spread, I would suggest using SPY. You want to use SPY. So SPY here. Pull up the chain. Now, normally I would say sell, the same 32 days out, but in this environment, it's the volatility has been through the roof, right? So the problem with volatility being through the roof is that it takes a long time for credit spreads to decay. So if you don't know what a credit spread is, I mean, you should if you're watching this video, but just a quick overview. Normally, I like to sell like a 32 delta spread, like say a put spread here. So we'll do with SPY, I like to go $5 wide, and in this account because it's very small. So if we review, I have to put up $388 to hopefully collect $111 by the end of expiration in 32 days. The problem with that is that this won't decay as quickly as I need it. I will have to wait 32 days to collect $100, which is, it might be, if you're new, this is something I would suggest just trying and just let it trade and learn from it, watch it, to see how it trades and see how it decays over time, right? You'll get what I'm saying when it doesn't decay as quickly as you need it. So what I would suggest, when you get more familiar, what you want to do, you want to sell it with less time. So instead of going 30 days out with spreads, I like to actually go the inverse and sell spreads with a max of 20 days. And I don't care if I go weeklies, right? But I like to stay, if you can, stay monthly. So this one's 16 days to expiration, so it's fine. And that's where I would go to sell a spread. Obviously, they'll be worth less, so you'll definitely have to go closer to the money to collect a decent amount of premium. But you can sell like the 330 put spread, 330, 325 put spread, right? You review it, collecting $111, right? I just went to the 32 delta. That's the easiest way, right? Just look for the 32 delta. That's how I determine my strikes, right? So here, I'll start over again. So if you go here to the spread, right, we'll go to 16 days, right? We're at 16 days, 32 delta. We'll go 31 right here. So we'll go, it's close enough, right? I don't want to get too close to the money with the 33 delta. So I'll go 31 delta, 330, 325, $5 wide, 31, 32 delta short option, right? Review it, getting $111, putting up 388. That's a decent risk reward ratio, right? You kind of want to get you want to collect a third of the width of the spread of the strike. So if you're selling the $5 wide spread like here, right? the max loss is $500, right? Or it's $500 in value, right? Well, if you're collecting $111, that's your money you keep. So the max you can lose is $388.30. And I think that's a decent risk reward ratio. You don't want to hold these until expiration either. So within like 10 days to 2 weeks, you're going to be closing this out, right? You're not going to wait the entire 16 days, right? And hopefully it should come in about 50%. You should get about $50 to $60 out of this, be able to keep out of this credit you received, right? So you just buy it back. A good rule of thumb, right? You don't want to hold these to expiration because anything can happen, and assignments are real and they can cause a lot of headaches and can blow up an account if you don't know what you're doing. So always close out your spreads before expiration, and usually about 25% to 50% of the credit received is what you want to collect and close them out, right? So with the shorter amount of time, it will decay a lot quicker, 10 to 14 days, right? And that's about my time frame. I like to hold these and be able to cash in, right? So that's pretty much it for the spread, right? So we've talked about how to pick an option, right? You want to pick the right delta, right? 32 delta, 16 delta if you're not a very large risk taker, which is fine. You'll just receive less credit. You want to look for liquid products like stocks that trade with a lot of volume, right? You don't want to trade like any piece of shit stocks, right? You don't want to be in like some penny stock and trading the options. You want to be totally away from those. You want to trade well-known names. That's very important. So, it just helps with liquidity, helps getting in and out, right? And that's what you want. So that's pretty much the gist of it for selling options, right? So if you have any questions, just go ahead and leave it in the comments below, and I'll answer them for you. You can always email me on my website, thefloatlocker.com. You can go here. You can always contact me. Go down here. You can follow my Twitter page. It's at the Float Locker. I don't know what it did there, or down here, I believe. Yep, my Twitter page at the Float Locker. That's probably the best way to contact me on Twitter. You can just send me a DM or just comments. Here I post all my portfolio updates, so give me a follow on Twitter. It's actually a really easy way to get quick and easy access to my thoughts, right? Kind of sort of real time. If I place a trade, I usually post it here. I post some things about crypto. I have a crypto account that I trade as well. Just give me a follow there, and let's take a look. But yeah, so if you have any other questions, feel free to let me know. I know that was just kind of a quick overview, even though this video is 30 minutes, but I try to keep it as condensed as possible, and just let you know that this is pretty much my core strategy of selling options, right? You want to be on the casino side. You manage it like in the morning for like 15 to 20 minutes in the morning, and then that's it. You leave it. You don't have to sit there and watch it all day or all night or all afternoon, right? You could concentrate on other things. You could monitor from your phone. I trade strictly from my phone. I don't even trade from my computer. This I just brought up because it's just easier to show people instead of my phone. It's such a small screen. So I kind of just started doing this to show you guys how to give you a better visual. But I don't trade from my computer at all. Trade from my phone is very efficient. You don't need to know perfect technical analysis, but it does help. You don't need to know like crazy indicators or nothing. I just throw some moving averages on a chart, and and that's it. Like, I'll show you right here. So, here's my chart. I throw a few moving averages. If you want to know more about that, just ask me. I could let you know my indicators and what I think what it shows me and what I'm looking for with these moving averages. But yeah, that's pretty much it. So if you have any questions, leave them in the comments below. Give me a follow, share the video. I'm very much appreciated. And just let me know what you would like to know about with selling options, right? And I could create a video or answer your question. All right. Thank you. Have a good day.